The Reserve Bank recently this week held interest rates steady, which caused a bit of a shift in market expectation. What's the effect on currency markets, particularly in the Eurozone? With more, Luca Santos from ACY joins me live. Look, the Reserve Bank decision expected. The wording, the commentary around it, was that any different for you? Was that any more important?
Right, well, good afternoon everyone, pleasure to be here again. Yes, they did maintain the interest rates at 4.35%. To be honest, it wasn't any surprise, I would say, right? Yeah. Last time I've been here, I've mentioned that they would have one more raise to do. They did, and then they paused again.
Right.
Expectations for inflation is that to come lower next year and 2025, all right? Wow, we are very close to the end of the year. So 2024, a lower inflation. 2025, they're expecting, everything can change it, but they're expecting, just depends on international scenarios, that inflation would come at a controlled area of 2 to 3%.
Right.
Now,
which is the target band for the
yeah,
Reserve
correct,
Bank.
exactly.
But the October monthly figure was fall.
Yes.
Everyone got excited about that.
Exactly.
Is it January 29 or 31, the December quarter CPI figure coming out? What's your view on that?
Right.
What's your expectation?
Exactly. So that's the point. Seems like we are going down, but then we go up again on inflation, right? This is not what they want.
On the monthlies.
On the monthly, yeah, correct, sorry. They want a steady slowdown. It just, it doesn't matter, we're going to make a whole party because inflation went down in 1 month, but then we go for another month, it goes up again. So it doesn't, it doesn't make any sense. We need a steady slowing on inflation, so then they can, start to cut the rates. Most probably, end of 2024, they will begin to think about cutting the rates.
Okay.
I don't think they will do it in not most, but let's say 70% of analysts I've been talking about, they think of mid of 2024, they would be, looking to cut the rates.
Yeah.
Most likely.
Any more rate increases?
No.
Okay, pause from here.
Pause from here.
So 2024's not going to get any worse in terms of rates.
Yeah.
But it's not going to get better quickly.
Correct.
Like, there are a lot of people going, the economy's going to fall off a cliff. They'll start cutting rates before the middle of the year. Mm-hmm. You're not in that camp.
No.
Right.
No. I'm more towards, yes, we're going to have more pauses to come that we'll need to. But soon as they see inflation more stable, coming lower and lower and lower, then a cut would be more appropriate, definitely.
I don't reckon, would you agree with this, we have had a more important CPI update than what we're going to get at the end of January? Because that December quarter CPI, you just get the feeling it is going to determine what interest rates are going to do for the whole of next year. It's sort of, we should all be stopping on that day when it comes out, because if it comes in well below expectations, well, hey, we're at the top of the rate cycle, and don't worry if it comes a bit worse.
But we can't forget that we are getting into the festive dates, right? Christmas, New Year, and everything. People will spend more.
Yeah.
Okay, and this will lead to maybe a little bit a tilted higher inflation.
Okay, but then last year's November and December, which were shockers, sort of November, I think it was 0.9% from memory. December was 1.3%. They drop out of the annual figure, don't they?
Yes.
So we'll automatically get
most probably
pullback. Hopefully,
hopefully.
Touch wood. November and December aren't like last
year. Yeah. I know. I don't think so. I think we may have a steady decline.
All right. So impact on the dollar.
Right, Australian dollar.
Yeah.
Oh,
Aussie
definitely.
dollar.
With Australia, we did had a rally from October to end of November on Australian dollar against US dollar. Okay.
Yep.
Most likely this is short-lived. Okay, because the market was sort of priced in the last hike. Yep. As well, at the same time, Australia, RBA, the Reserve Bank of Australia, was getting priced in the last hike. US, the Fed, the FOMC, was actually more towards pausing and not having any sense of we're going to hike again.
Right.
All right. We're going to have FOMC next week, 13th of December. Most probably they will pause again. 98% of the market expectations is a pause.
Yep.
Right. As I've left my desk today to come here, was 98.2, something like that, expectations for pause from the FOMC. So most probably we will have a decline on both currencies, and this will lead to Aussie dollar lower. Okay.
Right.
Most probably this is what I'm thinking of.
Okay. Labour market in the US, we had some more signs of weakening overnight last night. Non-farm payrolls coming up. What's your view
Okay,
there?
so we did had the ADP and we did had the JOLT. Okay, I just want to bring attention here for one thing. The BLS, the Bureau of Labor Statistics, have revised it downward the JOLTs. Okay, unfortunately I couldn't bring the chart here, but if we search on Google, you can see that BLS revised it downward. So from the last 5 JOLTs, BLS revised it downwards 4 of them. All right, 4.
Right.
So basically, in my conception, is that the Fed have been taking this data, well, not revised the data, the fake data, let's say, wrong, and being hawkish for no reason.
Right.
Because the market was actually much lower than they were expecting. Of course, you know, I'm not saying that the Fed or FOMC is the villain of the story. I'm not saying that. It happened.
Well, you sort of are.
Well, maybe.
But they've been playing with their minds like the RBA has been doing here.
Definitely.
Yeah.
That's central banks. They do it for fun, you know.
Yeah.
Let's raise it now. No, raise it.
Yeah.
Anyways, so they did revise it downward, the JOLTs, and it makes me think, all right, how does the Fed now, Jerome Powell will address these next week.
Right.
Oh, we maybe were wrong, and maybe we need to pause now. Okay,
Right.
so just depends on how. Probably they will be dovish. Definitely not hawkish anymore from Fed.
Yep.
But they need to maintain a certain neutral aspect. They can't say like, oh, we're gonna be dovish from now on, otherwise the dollar will tank. But yeah, this is my view. I guess we may have a cooling off on the job markets. We may see an NFP lower than expected, more towards, from the top of my head, I guess the numbers are, the consensus at 185,000. Last month it was 150,000. Most probably we're going to get around 175, 178.
Right, okay.
Right? So a little bit lower the consensus, just because those JOLTs was revised downwards. If we get up, then another surprise.